And it's time for the word on Wall Street. Top investors watching your money. With us all morning, Rebecca Walser. Rebecca, I do want to start with you on these markets right now because futures are in the red, and we are looking at, there's some caution. You've got Fed Chair Jay Powell coming up. We had a 3-day weekend. Last week, though, to be clear here, we did have a nice run up.
Yes.
Even though we were in the red on Friday, we did have a nice week last week, and we're getting these housing starts and building permits out as well. And then you've got Jay Powell's testimony coming up on the Hill this week. So what do you think that he could say that we haven't heard yet from him? Because they've definitely telegraphed their plans pretty clearly.
Yeah, we saw the dot plot.
The dot plot. Well, and the dot plot, I'm glad you brought that up because the dot plot is saying that there's going to be 2 rate hikes.
Absolutely.
Even though the street's betting on kind of 1 right now. So there's a little bit of a disconnect here.
Yeah, well, the street has gotten it wrong so far this year, as we know. We thought we were going to get a pause, then a pivot, and then obviously Powell kept coming out, Cheryl, and just heading, look at the data, we're data dependent. And, we were still seeing inflation. We were still seeing the jobs numbers. We just have so many openings. And he's just dealing with a really small and medium-sized business-generated labor market. And so I think that he's not going to be able to say a lot that he hasn't already shared, certainly in the commentary that we got last week. But I do still see potentially a July hike because the Fed seems like they want to go hawkish right now, Cheryl. Maybe we won't get we won't get any more for the rest of the year, but I think we definitely will get July.
There's a new opinion piece in the Wall Street Journal about Jay Powell, and the title is "Strong Fed Chairman Confronts Spending." Powell says it isn't his job. Greenspan and Volcker would differ.
Well,
ouch.
I mean, obviously, Volcker obviously had to handle interest rate hikes just like and inflation like Powell is dealing with. And obviously, Volcker at the time, we didn't have 100% debt to GDP, Cheryl, like we have now. And Volcker was able to raise interest rates at the time 20%. We are in a much, much different place. What we see is the Fed was very preemptive and they were ahead of it. Now we've got Bank of England today coming out potentially with a terminal rate of 6%, eventually. So we see that Europe is now raising and they're kind of lagging behind what we've already done. The economic pain from what we're experiencing absolutely affects housing. I love that segment that you just did because what's happened is we've had low interest rates for the longest period of time, and that really did raise the value of homes. Yeah. And now it just can't drop back down. And because normally if rates got cut as much as they have, we would see that, right, Cheryl? But with the lack of inventory, the values are not coming down.
People want a recession.
People want a recession.
And get a lower interest rate on their house.
I've never heard of such a thing. I think that they forget what like a depression recession actually is, right?
Yeah. I want to bring in a Commonwealth Financial Network Chief Investment Officer, Brad McMillan. I do want to get your take on these markets. And I want to pick up on something else, by the way, that the Journal points out. Because they say, look, he was asked last week during the press conference about, at what point do you go to the Hill and talk about fiscal responsibility? Well, he could do that this week. He's going to be in front of the Senate, in front of the House Wednesday, Thursday. Your thoughts?
Well, I think Powell has to try to find line here. On the one hand, he's quite right. It's not his job. On the other hand, what he does inevitably impacts what's going on. So how do you do that? I think what he's got to do is he's got to point out the consequences, of the interest rate increases on what's happening. But he can't step over that line. It's a tough place. I think he points out the consequences.
Yeah, and also, Brad, he's obviously going to be asked about the health of the banks. And we've talked about a lot about this on this program. In particular, Maria has with these regional banks. And the stocks are a little mixed right now. Silicon Valley Bank has entered into an agreement to sell its investment banking division, SVB Securities, to Chief Executive Jeff Lee Rink. The bidder group's going to acquire a combo of cash repayment of an intercompany note and then a 5% equity instrument. Brad, first to you and then to Rebecca on this topic.
Well, I think this tells us a couple of things. First of all, I think it tells us that there's still real value in the banking system, even for a bank like Silicon Valley Bank, which got caught in the interest rate implosion. Nonetheless, there's still real value there. Second of all, it says that the process of restructuring the banking industry is ongoing. In other words, people aren't just curling up and saying, oh, woe is me. They're actually making things happen. And I think that's a good sign for the future.
And Rebecca, too, he's going to be asked about this. He's going to be asked about these loans. We just did a real estate segment with Jenna Stauffer. On the commercial side, a lot of these companies were paying, they had 3.5% a year ago. Now they're facing 7%. More defaults are likely, unfortunately.
Yeah. The SVB deal, Cheryl, is interesting. It's like a reverse purchase. They just got acquired in 2019. Bad timing, right? Because you went right into Corona, and then obviously you had the banking crisis. So they're just going right back to the people that sold them the very first time, and we'll see if that's a good deal for the shareholders.
Brad, final thoughts on these markets. Obviously, we had a 3-day weekend. The tech rally has been strong. A lot of that is AI, if you're looking for a group to kind of pin your hopes on. But a lot of money is also going into fixed income right now. The ETF flows into fixed income are actually outweighing, in the latest data that I've seen, what's going into equities.
Well, I'll tell you, for all of the noise we've heard about how higher interest rates are terrible, and there's downsides, certainly. Nonetheless, for savers, you're actually getting a real return on your money. And for the people who are living on a fixed income, or even people who have significant investments, that's really helping their purchasing power. I think that's an enormous boost for the economy, and I think that's one of the reasons for the resilience we're seeing. There's an upside to higher rates as well, and I think that's one of the things that's keeping us going.
Well, the banks do make money with higher rates and money flowing into money market funds. Who would have thought that would be a conversation for this year? But it is. Brad McMillan, thank you so much for being with us this morning. And Rebecca, you're going to stay with us all morning long.